Welcome along, everybody, to Tea and Hot Sauce. We are live on YouTube and other channels. And we are going to be joined very shortly by Orlando, of course, who is the hot sauce part of the show. But in the meantime, I'm going to just grab the screen and show you a little bit about what I have been looking at over the last day or so and what I'm looking at moving forward. So I'm going to start off with the daily time frame, things that I'm looking at. I've got quite an extensive watch list, actually. We might not have time to cover everything. In fact, I'm going to start off with gold because gold is something that I have been talking about quite a lot recently. I know Orlando is keen on silver in preference to gold at the moment. I just want to give an update so that everyone knows where my thoughts lie with gold. And at the moment, what I had been waiting for was that bounce at the weekly pivot over here on gold. That was the area that I was really looking at. And if you remember, I had my trend line drawn in around about there, which coincided quite nicely with that weekly pivot area. And that was the area that I was really wanting to look out for a long opportunity. Now, since then, price has actually come down and just completely broken through that area, which means I no longer can look for long opportunities at the moment on gold. And in fact, the trend on gold is looking more and more unclear. It's just a consolidation really at the moment. I've got lower highs and I still at the moment have higher lows. I really need that pattern to break if I'm going to be looking for any further trading opportunities. So I need price ideally to break through this previous low level here where I've just put this horizontal blue line if I'm going to be trading short on gold. And if I'm going to be trading long on gold, I need price to break out at the top here. So I'm seeing this as a consolidation pattern. In order to trade in the direction of a trend, I need the consolidation to break so that I can then go with the overall market flow. So really that takes gold off the watch list for me for the foreseeable future until one of these two levels is broken. So I'll keep you updated as to when I do plan to really take trades on gold more seriously again. But at the moment, I don't see a strong enough direction on the daily time frame to warrant me placing any risk in the market at the moment. I can hear that we have Orlando in the room. Hi,
Yes.
Orlando. How's
Hello,
it going?
Chloe. How are you? I can
Yeah,
hear
really
the
good, thank you.
So yeah, I mean, I totally agree with you on gold here, and quite similar on silver. We've had a bit of well, the impulses are to the downside at the moment on both markets, on the lower time frames. But I let me share my screen, and can you give me powers, please? Hello.
Always forget about the powers, and
Okay.
I was just muted just then. Let me give you powers, and then you should be able to share your screen. I'll get the hang of this eventually.
Yeah, don't worry. Don't worry, don't worry. But I want to have your thoughts about this in gold. Yes, let's go. Let's start with the higher time frames. As you say on the daily, there's absolutely no direction in this market at all. um, very choppy price action. Even though we can see that we are inside of what seems to be a triangle on the daily, right? But if we go to the lower time frames, and this is where I want to hear your thoughts about this market. Um, I see that we are again inside of what seems to be another pattern, and right now bouncing off of these lows, right? I know it doesn't mean a lot, but what are your thoughts if we break with this high in gold? My thoughts are I wouldn't be taking this long in gold if we break with these highs because we are so close to this other level, right? To these previous highs. So
That's
my
the
risk,
problem, isn't it?
exactly, that's the big problem, right? Because we really don't know if we are going to be able to break with this level to the upside, right? But I mean, if we have, I mean, if we had this level, this looks like a slam dunk long to me. But because we do have the 1955 level to the upside, and I mean, the risk to reward ratio on this is off for me, so I wouldn't be taking it. But what are your thoughts about this? If we grab historic price action, from this low to this high, and we take it to the breakout, uh, maybe, and just maybe, we might get a retest of this level in order to take a better risk on a long position in gold. Maybe, and just maybe, but I mean, and that is a big maybe. And again, we do have this other level to the upside, the 1993. But if this plays out, the long here would be a great risk to reward, um, would have a great risk to reward ratio. But again, that's a little bit of wishful thinking, in the sense that there's a lot of things that need to happen before that scenario plays out. But I totally agree with you that I mean, and you can see it on lower time frames too, that there's absolutely no direction in this market, absolutely no direction. And if we take the silver chart, um, where is it here? If we take the silver chart, just let's wait for it to load, right? I let me just well, the silver chart has a little bit more direction in it. Let me just get rid of all these, right? Has a little bit more direction in it, in the sense that we are respecting previous broken levels, right? And right now, the same thing is happening in this market. Let me just delete this and this. The same thing is happening in this market, in the sense that we are retesting these previous lows. But because I see more direction in this market, I prefer the long side, or the long trade in silver rather than in gold. And if we look at the gold silver ratio, that's another thing that concerns me. Uh, if we look at the gold silver ratio, there is absolutely no direction. And I know that this chart is not for execution, right? But uh, the strength in silver has has turned off, in the sense that I mean, whilst gold uh, is in a sideways market at the moment, silver should be pushing this chart down, and it's not pushing this chart down, which leads me to believe that we are also in a sideways market in silver. But again, because this move is respecting the previous broken levels, we could see this as a double bottom for another push up. Just to say that it's clearer to me, the trade on silver, even though there's no execution at the moment for me. It's I do. I mean, if I were to take a long position in metals, I would choose this market rather than gold. And it's
Yeah,
and it's
absolutely, Orlando. I
right.
completely agree with you. It looks a lot cleaner, the silver chart. Gold for me, as you said, there is a possibility of a bounce in the area that price is, but the next resistance level is so close by that it, even though we believe that price might go up there, it makes the trade a lot less worthwhile, because we're risking more than we're potentially going to reap in rewards
Yep.
if that level does hold and gold continues to range and consolidate.
I totally agree.
Whereas if we wait for that level to break, as you said, and take the next move up, then that's a higher reward to risk opportunity and therefore a lot more attractive. So this is a bit of a waiting game. And that's basically what I was saying, Orlando, was, gold for me at the moment, there have been times where I've been specifically looking at potential entry points and areas for price to move between. And right now, I am specifically just waiting for price to do its thing and waiting for some clarity and direction before I try and jump into any opportunities.
Yeah,
There are
definitely.
things to look at other than gold that might yield much better, much higher reward to risk opportunities. So I'm moving on from gold this week. I'm not really looking at any opportunities right now, and there are other places that I want to put my money this week.
And there are other places that your money would be at. Your money at risk would be optimal. What else are
Absolutely.
you?
And
Yes. What else are
um,
you watching?
let's have a look. I'm going to grab the screen back if I
Yes.
can work out where I am. And let's have a look at the other things that I am watching. Now, I know I keep going on about them, but the US indices, it's the Nasdaq, it's the S&P index, and it's the Dow Jones. They are all just by far outperforming everything else in the market right now. These trends have been going since March and they are not stopping. The highs, we are seeing basically price breaking to new highs almost every single day now on this Nasdaq. And the reason this is happening, well, aside from the fundamentals, but technically, one of the reasons that this is happening is because price has never been this high before, therefore, there are no levels of resistance above us. So there are psychological levels, which would be the round numbers. So we could draw a line in at 12,000, another line in at 13,000, 14,000. Those would potentially be psychological levels where people trading long would be looking to take profits, and people
Yes.
expecting or waiting for a change in direction would be trying to jump in at what could perhaps be the top of the market. So we do have those psychological levels, but apart from that, there's no reason technically to expect that price is going to let up anytime soon. And if you were to have come along into this market on, for example, this day and thought, oh, this trend must be over, it's gone on long enough, then you would have missed out on all of this profit. If you were to have come along on this day, then you would have missed out on all of this profit. So my point with these indices is really, as a trend trader, my job is not to worry about when the trends might end. If I approach every day concerned that this trend might end, then I'm never going to be a successful trend trader because I'm never going to be able to take advantage or full advantage of the existing trends. And my job isn't to worry about when a trend might end. I know that the technical indicators for a trend ending, and I'm fully aware of those, and that's what I'm waiting to see. But until I see that, I'm not worried about when the trend will end. What I'm worried about is taking trades according to my strategy in the direction of the trend and scaling out of those trades and taking profit, locking in profit in those trades, as well as scaling in, taking every opportunity I can, taking profits when I can. And therefore, when the trend does end, it doesn't matter to me because I've already taken my profits along the way. So whatever strategy you are trading, whatever your style of trading, there is a way to make money out of this market, but you have to remove the fear of thinking the trend might end and just get on with trading with the trend according to your strategy. And that's exactly what I've been doing with these indices. And it's across the board. We've got very similar price action on the S&P. It only took out those previous highs more recently,
Yeah.
last week or a couple of weeks ago, and since then it just hasn't really looked back. So, you can see here I had the 3,500 level marked in as a potential um, level of resistance. The next level is going to be 4,000, which is around about there. So you can see we've got a long way to go in terms of a move to the upside before we even get to a large major round level that could be a psychological level. So basically all I'm doing is across all the time frames, looking for retracements, looking for an indication that that retracement is over, getting into my long position, making sure I'm taking profits at sensible areas, making my trades safe when I can, also at a sensible time. So the best thing we can do is get into a free trade. We love being in free trades where either we've taken so much profit that if the trade stop loss is hit, we still end up at break even, or just moving the stop loss to break even as soon as it's safe to do so.
Yeah.
So those are a couple of ways that we can make the trade safe, and then we just continue trading with the trend. So on the intraday timeframes, this is the 4-hourly, for example, on the S&P index. It does look like it's pulling back at the moment. This bar is not fully formed. We could look at the hourly time frame, whereby we can see that price is starting to turn around. We've got a small green bar here. It's not at a level of confluence for me. I would much prefer to see a test of this previous high, for example.
That is
If that
the
level
exact level I'm watching.
Right, exactly. So that's a level that I'm watching closely, and if I get an indication of a long trade from there, then I'll be very, very interested in that. With the Dow Jones, this one is slightly different because this one has not yet reached the previous highs. So I'm just gonna put my level of resistance up there because we've got three touches, pretty much three touches at that level. So that's where I'm looking for price to come into some resistance. I'm happy to trade long until that level. So again, if I find any long entries, it doesn't look so likely at the moment on the hourly because we've got a little bit of consolidation creeping in here, sideways movement. But if I find a long entry at this point, then I would be happy to trade up to that level there. And then, in all honesty, there is nothing telling me that price should turn around at this high level here. The other US indices have smashed through those previous highs from back in February. So there's no reason why the Dow Jones shouldn't eventually smash through as well. So all I need to do is take some profit off the table at this level here, and I'll be continually happily trading long with the trend on the Dow Jones as well. So good times on
Good
these
times.
indices, good times indeed. And that is why I basically just said at the beginning of the show, do you know what? I'm no longer looking at gold this week because there are better places to put my money, in all honesty. I
Hmm.
would rather put all of my money into these US indices for now while they're trending so strongly, and forget about tricky things like gold, which is just not really showing a great direction at the moment. That might change next week, and I'll be back into it. But for now, this is where pretty much all my focus is, I would say, on these US indices. Um,
Definitely. And can I share my screen because I want
of
to show you
course, yeah, go
something?
ahead,
Yeah.
grab it.
All right. So yesterday I was watching the Dow Jones again at this exact level right here. It was a very tricky level, and I tried to short it at this level when it ticked above my line at the 29, 28, 11, right? I quickly moved my stops to break even because of this exact thing that I'm going to tell you. Hold on. This is the Dow futures, and this is a better chart actually. And here's the line. So let's go back to the daily chart or 8-hour chart. That's fine. No, daily chart is better. All right. And it actually closed the pandemic gap yesterday at that line. right here, which was also retesting this low, this candle's low right here. So I went on to the CFD's chart, which had the same gap actually, and I saw that it was actually also testing this structure. All right, but because of, I mean, like you said, because of how strong these indices are, it was a very risky play, right? And right now, even though we are like having a level of support around the 29,040, I would love to see a retest of this zone right here for a long position in the Dow, and we might get this. I mean, the flush to this zone pre New York actually, and if we do, it'll be a good long to hold for all-time highs on the Dow because it's the only one that hasn't hit all-time highs, right? Uh, it's
Exactly. Yeah.
Yeah, and that's what I'm looking for actually. Now that we have broken with that gap fill or that pandemic gap fill, I am looking for a long position to hold for all-time highs, and we are not that far away right now. We are about 1.45%, which means that if we get a real bullish day in New York, we might get there today, right? We might get there. We already closed above the 2,900, 29,000 level, and that was a big level of the Dow, 29,000. All-time highs are about 29,550, right? So if we do get that move to here, to this previously broken level, uh, it's I mean for today's trading session in New York, if we get that flush to that level, which might happen again, if I don't know, if big money, let's say, pushes it down to get a better price just to jump in to push it to all-time highs, it'll be a good trade. And if we focus just on the candles, right? Yesterday candle was about 1.91% long. So there's a really good possibility that, I mean, and right now there's absolutely nothing going on in this market, as you can see on the daily, right here, right? But if we get that push down for about what 0.68%, then we can get long, and it's quite probable that we're going to get to that all-time highs if we have a very bullish day, right? But again, if we go to the hold on, to the lower time frames, to the hourly, um, this level really looks like it's holding, and that's the 29,000 level, as you say, round numbers. Very important, these indices at the moment, because there's no, well, on the Dow there is levels to the upside and the downside, right? But to the on the Nasdaq and the S&P 500, they're not. And that 29,000 level on the Dow, well, the 29,000 level, 28,000 level on the Dow, they're very important, and they're always celebrated when they're achieved, right? So there's, I mean, actually, why don't we have a look at the actual volume being traded today on the Dow, right? Now that we have the Dow futures chart, let's have a look at how or where the big volume is being traded. That could be a great idea actually to do. Did I put on the indicator? I did, right?
I thought you did. Yeah.
Yeah, session volume. I don't know what's going on. Hold on. Remove indicators. This is the, yes, this is the Dow futures. Maybe we have to go to the 5 minute chart. Okay. Right. So yeah, I mean, pretty interesting. I mean, the point of control is right here at the 29,053, right? And if our listeners don't know what the point of control is, the point of control is this red line, which is the level that has had the highest volume traded during today's session. Okay, and we have high volume being traded here too. But if you see below this level, the volume just keeps going down. So if sellers come into the market and really break with all or swipe all those buy orders that are placed around here, it's very plausible that we are going to get to that level because there's no volume being traded at these lows, right? And that's one thing that I'm going to be looking at. And of course, that to me, I mean, just taking the volume profile as an indication or as an execution tool is out of the question, right? This, I mean, I use the volume profile just to see where we might get where the orders are being placed or where the big volume is being traded. So if we get a bounce during the New York Open, if we get a bounce from this level to the upside, yeah, I'm not gonna trade it because that would be just me reacting to what I'm seeing in a very low time frame. So I wouldn't be taking that long, right? But if I see that price dips below the dip, dips below the value zone, and the value zone is just the range of the day, right? Dips below this value zone and continues to dip. I will be looking to that to my level around the 2880, 2880, right? No, 28,880
Yeah,
for a long. But it's I mean right now it's pretty rangy. How long how big is this range? It's nothing. It's
it's not big.
171.
Yeah.
Yeah, 171 ticks in the Dow is not a lot. But yeah, I mean that's I mean what you were saying with the levels that you are looking is absolutely, I absolutely agree. Absolutely agree. Another thing that we have going on is the DXY breaking to the upside, right?
Mm.
Breaking and holding these lows, but a little bit exhausted. It looks a little bit exhausted right here around the 93 level. Again, another round number that we can look at, and yeah, it looks a little bit exhausted. But I mean, this means absolutely nothing. When I say it looks a little bit exhausted, it means nothing. It just looks like that. But because we are holding this level, um, right now we are in a bullish scenario, right? And just because I say that it looks a little bit exhausted here, I wouldn't be looking for shorts in the dollar. Actually, if we break with the 92.76 on the DXY, I definitely would be looking to jump in on some US dollar shorts to for a trend continuation trend. For a yes, for a trend continuation on the US dollar. But because we are holding these levels, the possibility of testing these highs is quite high, right? And this is what I'm watching before the US Open.
Yeah, really good stuff, Orlando, and I completely agree with you there on the Dow and what you've said there. And it is just a case of being patient and waiting for those levels. That's all it's about, really. Um, being patient, waiting for those levels. And if you have done all of that analysis as you have on the Dow, waiting for price to break down below and head towards that lower level that you pointed out, then if that
Hmm.
does happen, it just gives you extra confidence that you know what you're doing. You've got your next level to look out for, and when you find the setup that you're looking for at that level, then you can be
Yes,
confident in taking your trade. So it's the market analysis and having the confidence in your market analysis that really does set you up for your trading and to take the best possible trades. So awesome
definitely.
stuff. We have now been joined by Mr. Jeff Pine, I do
Hello,
believe.
Jeff.
How's it going, Jeff?
Hey guys, yeah, look, sorry, I'm
Long
actually.
time no speak.
Yeah.
Where does the time go, Chloe? I've got no idea, to be frank. Sometimes it's spent downstairs having dinner, which is exactly where I've been.
Oh, nice.
How you been? How you guys been going? Anything exciting happening in the markets that I should be
We
aware of?
We've just been talking about the US indices.
Yep.
Oh, okay.
Because
So I'll
they
go back to
are
sleep
just
then, because that's not my thing.
it's definitely not your thing, Jeff, because they
No.
are trending away, and there is no end in sight for the trends.
Isn't it amazing? Who'd have thought, eh?
Who'd have thought? I every day I can't quite believe my eyes, but it is the gift that a trend trader waits for 6 months is a bout of trend like this. So that's
Yep.
why we've been chatting away about them. But I know that's not your cup of tea, Jeff. So you will be having something completely different to say come past when the preview of the US session.
Yeah, look, really, I don't know where to start, Chloe, to be honest. There's so many that are potentially reversing or potentially retracing big time, and taking advantage of that or trying to get into that is quite an art form. If you happen to be in front of the charts, let's say 22 out of 24 hours, it's easy. But if you're not, it's a little bit tough, and most of us are in that position. So we've got a situation at the moment where, pardon me, in my particular case, I've missed quite a few of the reversals, or if they are reversals, but certainly retracements. And they have gone rather swiftly, some of them. So it's now a question of, okay, are we in retracement or are we in reversal on a lot of them? The Euro pairs in particular are in that category. Aussie pairs are in the same category. And it's pretty much all, I guess, as always, to do with that dreadful thing called the US dollar. And it's trying its little puffer valve out to retrace or get back to something of a 94, 95 level. But it's struggling to do so, and has done over a long period of time now. So I still don't have any faith in trading the US dollar or trading with it or against it, because I think it's very, very fickle. At this point in time, it seems to be rallying, but can I trust it? Well, I'm not too sure about that. So I'm concentrating more on the miners than I am anything against the US dollars, the US dollar rather. And so far that's panned out pretty well. Today I've got, as I showed you before in the earlier show, an Aussie Kiwi trade in the market, trying to trade that long that's kind of hanging around about the entry level. A little bit out of the money at the moment, and it's just gone sideways. And I think that's kind of the market we're in. It is what's it now called? NFEC or something tomorrow, otherwise or previously known as NFP. And I guess the market's having a little bit of a spell on the back of that. We've had a little bit of news out this week. There have been movements to and fro. The Aussie has been right in the thick of that, and that has come off somewhat. And I think that's probably going to be my focus in the next 24 hours or so, because the Aussie, certainly against the US dollar, has now come down to a very strong level. That is weekly pivot and monthly pivot combined, with pretty much an untested daily pivot above. So that's why I'm a little bit keen on trading the Aussie Kiwi, all of the above, I guess, towards the long side at the moment, but only in very, very brief time frame. So it's an intraday trade, if at all. And if you can find that back to the daily pivot, I think that's probably where I'm at. So Aussie back to the daily pivots. I'd like to continue to have my short bias with the euro against anything, I think, at the moment. And if we can get a pullback on the euro versus anything, I'd be more than happy to trade that short as well. With the exception, would you believe? But I think it's now pretty much gone now. We were talking about this earlier. I would like to be able to trade the euro versus the Aussie back to the pivots and then look for a short, but that appears to have gone. Sadly, I wanted to trade that, but too far gone. Now I'll look for the shorts when we do hit the pivot. So it's kind of that kind of day, that kind of week where I'm looking for these potential reversals to let me know if they're going to be reversals or they're going to be retracements. And only market structure can tell me that. And frankly, at the moment, I don't have too much in that department. So it may well be that the trades I'm in at the moment, I'll just have to manage. And those that have gone by the wayside will have to stay by the wayside until tomorrow, but probably more likely next week. So I haven't really got a whole lot to give you apart from that little bit of, I guess, insight as to what I'm thinking. But yeah, no more trades at the moment.
In the same direction as you, actually, on some of these things. Thinking
either I've lost you or you've lost me. I'm not sure which one it is.